What's good? Welcome back to another episode of Where the Money. And we on episode 26, and you know we keeping it rocking and rolling. You know we locked in on cryptocurrency right now. So today we're going to talk about the recent downslide in price action, Europe's first Bitcoin spot ETF, Coinbase's future ETF, and maybe why we need to slow our roll a little bit on how we thinking about this whole space. So let's get right into it. Let me share my screen and let's go to CoinGecko.com. So today we have Bitcoin sitting at around 27,700, about 27.8. We have Ethereum sitting around 1733. BNB is sitting at $223, and XRP is sitting at 57 cents. But you can see within the last 24 hours, Bitcoin has slid 4%, Ethereum has slid 4.5%. So let's take a look at it on the charts. Let's back out a little bit and look at where we are as a whole. We've come down from the all-time high of 70,000. We've come to a local bottom of 15,000. Now we're ranging at around 28,000. And how I view it as we're coming down from the all-time high. Now we need to find a balance. And this is why I believe we have time to grind out price action. But if we look at where we can go in the short term, we're in this downtrend and we're staying right on par with it. But it's not to be worried. Like, I don't think this is like the huge next step down, because it could be a next step up. If we look back in April, we've had the same kind of structure and we've taken legs down and popped right back up. We did it here in February, where we came from 24,000 and we came all the way down to 19,000 and went right up into the next leg into a price range above where we are. So right now, if you're a trader, I'm pretty sure this is pretty good for you. But long term, you just kind of got to watch it and see what's going on. But one thing I want to look at here is this line, this blue line I have going through here is the 200-week EMA. And in the past, like, let's look at May of 2020 when we were at $8,000. Once we got past the 200 EMA, it turned into support and we really rocketed off all the way up until $70,000. And then in December, we went below it. And as you can see, we had some pretty strong price action below the 200 EMA. So I just say all that to say we're getting pretty close, and we're going to see if we're going to bounce off of it and have it as support or break through it and have it turn into resistance. But that's just something to watch out for. It's not necessarily about the day-to-day price. We're here for the long term. None of this is financial advice, but I don't want you to be too antsy about what happens with the price action every single day. But let's get into the news. I'm pretty sure you've heard Europe's first spot Bitcoin ETF is listed in Amsterdam by Jacoby FT Wilshire Bitcoin. So when it comes to finances, everything is a race to see who does it first. So look, they got it out there first. They got approved. So they're going to be the blueprint of if they should do it right, or if they handle it wrong, they're going to be what not to do. But let's just listen to them speak really quickly. And we're not going to listen to the whole thing. I just picked out two little spots that I want to discuss, and I'll link it below if you want to read through the whole thing. But let's get into it.
London-based Jacoby Asset Management has listed Europe's first spot Bitcoin ETF roughly a year after its planned launch. Joining us now to discuss is Jacoby Asset Management CEO Martin Bednall. Welcome to.
Now, we're not going to listen to the whole interview. I just want you to pay attention to that one thing she said. She said it released a year after it was planned to launch, not after they submitted it. You know what I'm saying? So after they plan to release it, it's been a year after that. So these things take time, which is why in the States, in the US, there have been several spot Bitcoin ETF applications out there. And there's no guarantee that they're going to get approved just like that. These things take time. And because we're so into crypto, we're keeping up with every single little bit of information. And it kind of gives us, it's a little bit of information overload. We really don't need to know all this, but it is good news to understand what's going on. And it is bullish for the future. But let's just hear her say it one more time.
London-based Jacoby Asset Management has listed Europe's first spot Bitcoin ETF roughly a year after its planned launch. Joining us now to discuss is Jacoby Asset Management CEO Martin Bednall. Welcome to.
And he continues to go through and talk about the ETF, but there's one thing that I really want to highlight. And this is basic information.
Spot Bitcoin ETFs. How are we ensuring that, like, this certificate is now helping me meet my ESG goals?
Okay, well, the first thing I'll say is that the fund itself is a pure Bitcoin play. So it's pure Bitcoin beta. We hold as an asset of the fund in custody with Fidelity, the Bitcoin 1-to-1 for the value of the fund.
All right, that's the important part. Spot Bitcoin ETFs. When it comes to spot ETFs, they need to hold the underlying asset, which means they need to hold the actual value of the Bitcoin that they have in their ETFs. And he said the Bitcoins are 1-to-1, which is great. You know what I'm saying? So that's good news. And that's basically understanding what a spot Bitcoin ETF is. And you can listen to it and talk about the whole thing, but cryptocurrency is fully political at this point. So he spends this whole interview discussing ESG, and that one part he just talked about really explains the whole ETF. Everything he talks about in the interview is wrapping ESG around it. So cryptocurrency is fully political now. But let's move on to the next piece of news. Coinbase wins approval to offer futures trading in the US. So we know Coinbase is making major moves, and I really think we should pay attention to how they're moving in the future. But I'll link this article down below so we can discuss it. But there's one thing I really want to discuss in here. The NFA approval, which came nearly 2 years after Coinbase filed its application, could allow the company to extend into a largely untapped market. And the point is, nearly 2 years after they filed the application. Like I said earlier, these things take time, and we really need to chill out in crypto. I know we want to talk about everything and try to act like we're all economists, and this has given us a new lane to really dive into economics, but we really need to chill, because the one thing that you understand once you get in crypto and you start to learn about everything else in traditional finance and real estate and stocks, it moves pretty slow in real life, and things take time. So you have to be locked in, yes, but you can also kind of chill and take a step back and just watch these things play from a distance, because this thing took 2 years. But let's finish the article. The global derivatives market represents 80% of the entire crypto market, with leveraged bets on futures and other derivatives often at the root of volatility in the wider market. We keep talking about on this channel financial products being created based off of cryptocurrencies. But if you look at the stock market and traditional finance, and even in cryptocurrency, like they just said, the majority of the money is made in derivatives. They talked about 80% of the entire market. So what do we do as retail? We go to Coinbase and we buy, or we go to any other exchange and buy and hold. That's not really where the majority of the action is. Of course, they make a lot of revenue from transacting fees and holding crypto on their platforms, but the real money is made in derivatives, and that's when you get to take it to an advanced level and really study that. And the last thing, in July, crypto derivative trading volumes globally totaled about 1.8 trillion, according to research firm CCDA. That's almost $2 trillion in 1 month as far as trading back and forth. And that's where you start to see where the real value of cryptocurrency and transactions and financial products are held. But, that's just something we should keep our eye on. Shout out to Coinbase, shout out to Jacoby Finance. Let's see how they do. And let's get into the tweet. Brian Armstrong, he tweeted about Coinbase getting approved for the futures. Major moment for the crypto regulatory clarity in the US. Of course, with each product that comes out, more clarity is there, so it is a win. This has been a multi-year process towards approval, and we're excited to finally be launched federally regulated crypto derivatives with margin to our US customers, which basically means new products are made for everybody to get wrecked, and the big dogs really know how to make money in this, but that's neither here nor there. And one more thing to the point of taking our time, SEC delays decision on ARC's 21 shares spot Bitcoin ETF. And they already pushed it into 2024, and they're going to continue to hold these things off, which is cool because we have time to make our plan, research what products we like, figure out how we want to move inside of cryptocurrency, because it's more than just buying the asset itself. You can create a community. I like to bring the news and the content to you guys so we can interact and discuss these things on a deeper level. So you have time to figure out how you want to move inside of crypto. But, this is going to be a quick one. I just wanted to keep you guys informed on all the news that's going on, and let's pay attention to where the price is about to go. But once again, I just want to appreciate you guys for rocking with me, and I'm going to holler at y'all.